This is new president and CEO for the New York Fed. It is going to be John Williams, who has been president of San Francisco Fed. We now have Michael McKee, Bloomberg's senior international economics and policy correspondent here. Michael.
Well, it's not a surprise because the name had been leaked, but it is a different name than people had been expecting. Now, John Williams, of course, a very widely respected monetary economist. He has been the president of the San Francisco Fed since 2011, has a doctorate in economics from Stanford. He spent most of his career at the central bank, a little time at the Council of Economic Advisors. He was Janet Yellen's research director when she was the president of the San Francisco Fed, and of course worked with her on the board. He is an expert in monetary policy. But the New York Fed announced that it was going to have a very wide, broad, and diverse search for a different kind of leader, and they ended up with another white male. And that is going to raise some questions.
And those names quite specifically included women and included people of color.
It did, and that is going to disappoint community activists and stakeholders. Now, there's no way to block the appointment. He has been approved by the Board of Governors in Washington. He will take office on June 18th. The search committee apparently felt that with only 3 members on the Board of Governors, it would be important to have someone with a lot of monetary policy experience to help Jay Powell, who's the new chair and is not an economist. And it doesn't look like we're going to get a vice chairman for a long time. We have no idea when one will get appointed, and then they would have to be confirmed. But also the committee says when you put up a list of the things that you need in a president, John Williams stood out far and above all the other candidates, including in making diversity work. The search committee chairs, I spoke with them, they said, you look at his track record in San Francisco, he took the bank from 12% diversity, diverse staff, to 46%. He made a major effort at community outreach, and they feel that he ticked those boxes, as one of them put it. It wasn't just talk, it was action on his part. So they feel very comfortable with having Williams and say he is the most qualified and best candidate. A couple of other things that people are going to criticize, though, is he has no market experience. And obviously, the New York Fed is very important because they carry out monetary policy for the Fed in the markets. The answer there is that Williams has worked with the Fed, on the Fed board, has studied this for a long time, has worked with the Fed chairs and understands it. And also, different New York Fed chairs have come to the job with different levels of experience. Tim Geithner had no experience in markets, so it's not completely necessary. And the final thing is the regulatory background. Elizabeth Warren and some others have criticized him because they look at what happened with Wells Fargo, did a lot of things wrong over the last 10 years, and he was heading the San Francisco Fed during much of that time. So they're saying, therefore, he must have been responsible. Well, the problem is the Fed, especially the San Francisco Fed, doesn't oversee Wells Fargo. The only thing they oversee is the international divisions of Wells Fargo. The Fed is just one of 5 regulators in the United States, and the Office of the Comptroller of the Currency really regulated most of Wells Fargo. And when the Fed does get involved, it's the Board of Governors, not the San Francisco Fed. So their argument that he didn't sufficiently regulate a bank under his control, it doesn't hold water.
So that's terrific. Thanks, Mike. Please stay with us right now. We're going to bring in Jefferies senior economist Thomas Simons for his initial reaction. So Thomas, explain to us, I suppose, what a lot of people will be asking: monetary policy, because part of his new job is going to be running the FOMC. What do we know about his monetary policy? How might it change the direction of the Fed, if at all?
Well, I think that Williams is something of a centrist. Earlier in his career, I would have said that he was a dove, but over the last couple of years, his views on monetary policy and the direction of interest rates have been much more consistent with the consensus. And this move from sort of like 3 rate hikes expected this year to now kind of edging towards 4, he was one of the proponents earlier on in that move. So I don't know that it necessarily represents a big change in the direction of overall monetary policy. I think it's good to have some consistency. Certainly at this point, when views are changing on monetary policy, if you had a complete unknown with little policy experience coming into the New York Fed, that might create some more uncertainty and more instability. So I think it's a good thing from that perspective.
I think we've seen some of his research where he talks about the neutral rate in the U.S. being very low. How hawkish is he when it comes to these elements?
I don't view him as being particularly hawkish. I think that he tends to react relatively quickly to incoming data. The incoming data has been very solid recently, especially on the labor market front. So I think that it's consistent with that.
Mike?
I brought along a chart here that looks at his neutral rate research. He and Thomas Laubach, who's head of monetary policy for the Board of Governors now, when Laubach was out at the San Francisco Fed, came up with a way to calculate what the neutral rate is. It's difficult to do because it's a moving target, but basically you can see the white line. It has moved up over the years, and what I did was add inflation back into it because their neutral rate is inflation adjusted. And when you look at that and then you look at what the Fed's target rate is, you can see that monetary policy is getting tighter and tighter, but it wasn't for a long time, and that argued for the Fed remaining loose. So now you're about 50 basis points away. Now, if the neutral rate keeps moving up, they'll have a little more room, but otherwise you close that gap at the end of this year, and it'd be interesting to see where he would go with that.
I think recently he also spoke about this price level targeting instead of inflation targeting. The chart A709 showing you that it's better to keep an eye on the level of prices on a steady growth path rising by, say, 2%, the very long run average inflation rate at 2%. Could we see this shift in their thoughts in the board now that he becomes the New York Fed president?
Well, it's not going to happen right away, but it is something they're all talking about. Does the 2% target that they've aimed at for a number of years now really still make sense? And Williams has been arguing that maybe what you should do is go to this price level targeting. And when you look at this chart, what you see is the PCE index, which is their target, and how it dipped. Inflation dipped during the financial crisis and never came back up. And his suggestion is you let inflation run for a while above what the level would have been, and then you end up with an average inflation rate, and it establishes inflation more at that level. That is his suggestion for what could be done. Several other people have different ideas, but since he has been pushing this forward, it's likely it helps move the debate forward, and during the next year, they'll be talking about whether they want to change that policy.
So, Thomas, I'm curious about the team that gets formed here as a practical matter. I mean, the New York Fed decided on this individual, but he's part of a larger team. The third most important member of a team. We don't have a vice chair, as Mike says, probably won't have one for a while.
Right.
But it strikes me, we have in Jay Powell, a non-economist. We have in Randy Quarles, a non-economist. This man is an economist that, by all accounts, really is very credible as a macroeconomist. Does that mean that he might have an outsized degree of influence within the Fed?
I think that his experience lends towards having a good voice on the committee. He's definitely well respected both internally and externally. His body of research is very strong. The San Francisco Fed, for years, has put out very good pieces on the neutral rate and other sorts of good topical comments. I think that the New York Fed president has a big influence on the FOMC always, and like you mentioned, him being an economist is good for balance of opinions.
Well, the New York Fed always has a vote. That is why they become more important. It doesn't change the characters around the table, except that Bill Dudley isn't going to be there anymore because Williams has already been a member, but now he will have a vote at every meeting.